Good morning. It's Jim Barrett from RJO Futures. Monday, July 1st. Notes and bonds lower. Overnight, Japanese economic numbers, a Tankan survey, highest in 2.25 years, has brought the stock market back from a bit of a shaky close on a worldwide basis and put a little pressure on notes and bonds. But I mean, notes and bonds still stabilized last week after suffering the biggest decline in prices on a percentage basis, or second biggest in supposedly 33 years. I mean, we all know the yield jumped from 160 all the way up to 266. You'd expect a period of stabilization after that. The question going forward is this stabilization a possible bear flag, or are we basing for a bigger recovery in note and bond prices? We get some data this week that may help with that. However, it's at the end of the week in a holiday shortened week and the kind of weird hours Wednesday, Thursday, so be careful of that. But the government is going to go ahead and release the unemployment number Friday. Actually, claims number Thursday's claim number will actually be released Friday also, because of the 4th of July holiday, of course, falls on Thursday the 4th. All right, so the Fed officials were out last week basically trying to calm the market down, and did. I mean, obviously the big break in prices was due to the fact that the Federal Reserve Board spoke about possibly cutting back a little bit on their bond purchases. However, these guys were made it very clear that that didn't mean that there's any timetable for raising short-term interest rates, and this did stabilize things across other asset stocks, for instance, and to some degree commodities. The gold and silver, I should say, are higher today, following through on Friday's big recovery, and we may have a real turn in there. Newspapers are full of stories kind of naysaying that. They say the Asians aren't doing the cash buying they were before. Well, as we all know, that turned out not to be an important bottom anyway. The fact that they're not buying and the price action is as strong as it is the last couple of days may indicate a turn in these markets. What to expect for the unemployment number? It's always a better idea to take a look at the number and then try to go with the market action rather than guess ahead of time. It's going to be tough. Nerves have been frayed. People have lost a little confidence in bonds. It's going to be tough to sustain a real recovery in prices, I would think, on a near-term basis. So people have been surprised. Even big fund managers that have been very successful in the past have been surprised by how quickly rates have backed up. So a lot of damage was done. However, on a short-term basis, I'd expect choppy action until the numbers at the end of the week. I can reach at 800-500-2461 to discuss any commodity futures market. Remember, there's a risk of loss in futures trading, so it's certainly not suitable for everyone. Thank you.